All right, guys, welcome back to Father and Son Investing. Second video of the day. We're going to talk about Coinbase right now. Why Coinbase? Well, on April 14th, they're going to have a direct public offering. We'll talk about what that means. But today is April 5th, and tomorrow, April 6th, Coinbase is going to do something very important for that offering. So this is the news. Coinbase to announce first quarter 2021 estimated results and full year 2021 financial outlook. So this is kind of unique. We're going to get a peek into their finances a week before this direct public offering. That's going to help tremendously for us to be able to get a fair valuation on this company and figure out what the stock price should be. Speaking of valuation, just how valuable might this company be? Well, from the CNBC website, they say that Coinbase has reached an implied valuation of $68 billion. Now, how has that grown? In 2018, the implied valuation was only $8 billion. So we're looking at 8 times the valuation that it was back in 2018. All right, many of you are not going to be familiar with Coinbase. If you are one of the Humble financial followers on this channel, you might be familiar with Coinbase because Humble just launched their ETXs, and Coinbase Pro is one of the cryptocurrency exchanges that is working with Humble in that. So let's just talk a little bit about Coinbase. Now, they are pretty much considered the on-ramp for a lot of people to get into cryptocurrency investing. In fact, Coinbase has 43 million verified users. Now, Coinbase is very good about trying to help people create an account and understand what it is that they are investing in, and they also do a lot of work to help them understand how this might affect their taxes. There are just great things that you can click on here that will help you get started. So if we were to click on create a Coinbase account, it takes you right to what you'll need to know. So that was important. I just created my Coinbase account over the weekend so that I could use Humble Financial to invest in their ETXs. What do you need? Well, you've got to be 18 years old. You need to have a government-issued ID, no passport cards, a computer or a smartphone, and a phone number. You need the latest version of your browser to be up to date as well. And it will walk you right through how to create the account. I did this in just a few minutes. I was able to use my cell phone to take a picture of my driver's license to verify my ID. So within just a few minutes, I was able to create an account and get logged in. Now, it is nice with Coinbase, they use two-factor authentication. Initially, that started with just my phone number, but they sent me an update today to say, hey, now that you've got some money in here, you need something better, and they made me use an authenticator app. So they are trying hard to protect your assets. Once you have created your account and verified your ID, then you need to fund your account. There are various ways of going about that. I just did it with one of my bank accounts. They don't charge a fee if you're using an ACH method of paying. If you want to do like a credit card, they're going to charge you a fee for that, obviously. Now, once you have funded your account and verified your ID, in fact, for verifying your ID, you're going to get $5 in cryptocurrency. And look at that, mine's already now worth $5.09. So I've made 9 cents just in a couple of days on my cryptocurrency. Once you have funded your account, they're going to let you get a lot of education. In fact, you can earn up to $36 in a cryptocurrency rewards just by completing some of these modules that they have. They're very short. You know, you're looking at 1-minute modules, and they will teach you important things about digital assets so that you can get up to speed quickly. You can see why this particular exchange, Coinbase, is a nice on-ramp for people interested in getting started in cryptocurrency or crypto asset investing. I use those terms, cryptocurrency and crypto assets. Originally this was considered a currency, but really has become more like an asset, similar to the way that people are investing in gold, at least at the moment. But I don't see the future of this remaining that way. As long as governments will allow, I think that cryptocurrencies will indeed be used more and more like currency. So that's just Coinbase, the basic. Now, I ended up using Coinbase Pro because of my Humble Financial account. You can't use basic Coinbase. You have to use Coinbase Pro. There's nothing new that you have to do to set up that account. In fact, I looked all over this page looking for a link to Coinbase Pro and never could find one. So I Googled Coinbase Pro, and as soon as I clicked on it, it logged me in automatically and already knew who I was. All right, enough about the basics, at least, of how to use Coinbase. You really just have to use it to learn more about it. Let's talk about investing in Coinbase, which is obviously way different than just buying cryptocurrency. You will have an opportunity to buy their Class A shares starting on April 14th. On February 25th, 2021, they filed their S-1 with the SEC with the details of their desire to go public by a direct public offering. Now, a direct public offering is different, much different than an IPO, so let's talk about that. All right, this is a little graphic from the Wall Street Journal. Sorry if it's a little bit blurry, but it makes the point. So in a traditional IPO, a company decides that it wants to go public. It speaks to an underwriter, which is going to be an investment bank, to do the preliminary paperwork and establish an initial price. Now, the way that underwriter or investment bank is going to do that is they do what's called a roadshow. They essentially start shopping around or getting feelers for what somebody would be willing to pay. Now, really, they're going to go to institutional investors who are going to be buying a lot of shares, and they ask them how much you're going to be willing to pay for this stock. Now, of course, the institutional investors don't want to overpay, so they're going to lowball the underwriter so that once it does go public, they can then sell their shares for a profit. So in the end, what does this end up doing? Really, it keeps the price of the IPO that the company will get for the shares, it keeps it down low because obviously it's going to go up so that other people can make money on this as well. The underwriters are going to get their share. The institutional investors are going to get their share when they sell them to retail investors like me. Now, how does a direct listing differ? Well, in a direct listing, the company bypasses that underwriter and goes straight to the retail investors. Obviously, institutional investors can also buy this, but they're going to be buying all at the same price. Now, with direct listings, rather than issuing new stock, the company is just going to be selling the stock that it already owns. So there are already investors in Coinbase, and those investors will have the opportunity now to sell their shares. How much of the shares end up on the NASDAQ is going to depend upon how many shares the current investors feel like selling. So what has this looked like with other companies who have gone public this way? Well, we have Spotify and Slack to use as examples. Spotify started with a $30 billion market cap on day one. Only 17.2% of the total shares outstanding traded on day one. With Slack, they started at $23 billion market cap and only 22.8% of the shares traded on day one. Now, how else does a direct listing differ from an IPO? Well, one of the things that's going to differ is there's no lockup of shares. These investors who already have Coinbase can sell their shares, whenever. So, oftentimes, people who are insider, early on investors, they have to wait for a while after an IPO, like 6 months or so, before they can sell their shares. The other way that this differs is that no funds are raised by the company, so Coinbase will not be getting additional funds from the selling of these shares. All right, let's just talk about Coinbase then if you're going to invest in this. Obviously, you'll want to do even more due diligence than what I can give you in just a few minutes. But their mission, they say, is to create an open financial system for the world. To do that, they have created a digital currency exchange. Right now, they have, like I mentioned earlier, 43 million verified users. So we're not talking about fake accounts in here. And they have 2.8 million users who are transacting at least monthly. That was as of 2020. They have a lot of experience doing this. They were founded in 2012. Over the lifetime then of the company in the past 9 years, they have traded $456 billion worth of digital assets, and they currently have $90 billion worth of assets on the platform. Now, there is one very nice thing in the S1 that I would encourage you to go and look at, especially if you're not very used to cryptocurrencies and blockchain technology. They have a glossary to the crypto economy, they call it, and they will walk you through different terms that are getting used as you invest in this. You're going to run across terms that you might not understand, and it will help you understand what all of these different terms mean. So this comes from Forbes. You need to understand how Coinbase is going to make money. They make money on the margin fee, which is also known as a spread, and that's the difference really between when an order goes in and what the price is, when it's finally achieved. So the margin fee you end up paying depends on the change in price between when you get a price quote and when the order is actually completed. The other way that they make money is their Coinbase fee. This is essentially a commission. Now, we've all gotten used to being able to trade stocks without commission thanks to companies like Charles Schwab and Vanguard leading the way. And so going back to paying a commission may seem kind of odd to many of us, but that is the way that Coinbase is going to make money on commissions. How much of their money is derived from margin fees and their Coinbase fee? Well, they tell us in their S1. Right here we see it says, for the year ending December 31, 2020, transaction revenue represented over 96% of our net revenue. So this company is heavily dependent on fees. Don't expect to see those going away anytime soon. Now, they are trying to diversify a little bit. Going back to the article by Forbes, they talk about Coinbase has several other lines of business in addition to its exchange services. They're doing Coinbase Commerce. This is similar to PayPal, but using crypto. They're doing Coinbase cards, so essentially users will be able to get a physical Visa debit card and an accompanying app to spend cryptocurrencies in the physical world. And then they're also doing USD Coin. This is essentially their own cryptocurrency, and it's based on the Ethereum platform. And essentially, one USD coin will always be worth $1. Now, of course, this company will always face competition. What is their share of the crypto market capitalization? Right now, for 2020, they ended at 11.1%, and you can see how they have gone up since 2018. So they've more than doubled their share of the capitalization since 2018. When it comes to those assets that are on the platform, by far it's Bitcoin and Ethereum. When it comes to the volume of cryptocurrency being exchanged, still Bitcoin and Ethereum lead the way, but up to about 44% of other crypto assets are being traded on Coinbase. So it's starting to diversify here. Lastly, I just want to look at some of their financials. I'll be excited to see what their financials are tomorrow when they reveal the first quarter of 2021. But here's how they have been doing. So for 2020, we're looking at $1.2 billion in total revenue. Compare that to 2019, and it was less than half that at $533 million. Now, their revenue is going to vary significantly based upon the price of cryptocurrencies as well as the demand for trading. Remember that their revenue comes from all those fees that they're charging based on trades. So that is one of the risks that they list in investing in Coinbase, is the volatility of cryptocurrencies, something to definitely keep in mind. Now, in 2019, they lost money. We're looking at a $30 million loss. In 2020, it was a $322 million gain. There is so much more than I can talk about in a short video like this. I'm excited for their quarterly results report tomorrow. I'll pay attention to that and get another video out, and we'll share some more details on investing in this company, especially some of the risks that you need to know about. That's it for today. I encourage you to get the young people in your life investing, get them started early so that they can get the compound growth that is so essential to seeing wonderful returns when they get to be my age. Until next time, enjoy your investing.